Prashant. Let's shift focus now to the FMCG space. Dabur is one of the stocks that we're looking at this morning. Dabur had an analyst meet and they spoke about a lot of positive things. Abneesh Roy of Nuvama Institutional Equities joins us now to tell us how to approach this. Abneesh, I think the big takeaway for me from Dabur's analyst meet was the fact that they speak about a rural recovery now after FY23 being a very poor year for rural growth, right? How would you factor that into the stock? Because the stock has had a huge underperformance compared to the market, compared to the mid-cap index. It's barely grown about 2% this year. Do you see a catch-up now?
Yeah, thanks and good morning. Yes, we do expect a catch-up in rural. If you see now, as per Nielsen data, no FMCG category is declining. But if you see from a two-year basis, still the rural growth is below urban growth for most categories. And El Nino has not at all helped in Q2. In Q2, if you see, 1 month had very high rainfall, 1 month had a 36% deficit, which was a 100-year low. That has definitely spoiled the overall rural sentiment for every form of consumption in FMCG. So if I see when we started Q2 and now for most companies, the rural growth has been slower. Coming back to Dabur, they are taking specific action. So the CEO who has come, Himalaya CEO, Mr. Philip Hayden, he is driving a lot of transformation in their healthcare portfolio. They are targeting allopathic doctors in a big way. Second, of course, is from a power brand, they are going towards power platform and expanding TAM significantly. And international business will grow faster than the India business, and they will see margin expansion this year versus last year. So overall, it's a good story in the overall FMCG, and definitely we are overweight. The health immunity portfolio is now back to normalcy. The Badshah Masala also should do well, distribution expansion. But overall, rural slowdown, I think, is still there for every FMCG company. It is not declining. That is the only, I think, positive. We have a buy and we have a target price of 725. So we expect the underperformance to recover.
Got it. You have, Abneesh, hi, good morning. Do you have coverage on Restaurants Brands Asia?
Yes, we have a coverage, and we did see that slight overhang of the promoter stake sale that has been addressed. Going ahead, definitely we see 2-3 triggers for the stock from a medium-term perspective. In the Indonesia business, they have given the guidance of cash break-even in FY24, and the Popeyes business in Indonesia should scale up. And also strong expansion in Indonesia and India will happen. India, we expect 450 stores in FY24 and then 700 by CY26. In Q3 for all QSR brands, there will be the festival and the Cricket World Cup recovery. Having said that, in Q2, most forms of discretionary consumption are weak. So we have to factor that Q2 will be weak. But yes, overall, for restaurant brands, we have a buy, we have a 146 target price. So we have seen very good quality investors really buying the promoter stake sale. But if I see 15.4% promoter stake sale is still left. And within QSR, we'll prefer players like Sapphire and Devyani and Jubilant from a medium and long-term perspective. Near-term, I think this slight overhang has gone for restaurant brands, but 15.4% stake is still left.
All right. Hi, Abneesh. Good morning. Abneesh, in the past week, we also had Grasim go ahead and announce the brand name. You have been positive on Asian Paints. Now, this is quite a formidable competitor that's coming in there with reach as well as distribution, unlike what we saw in the past when maybe JSW Paints tried to put a bit of a challenge. How would you view this entry of Grasim into the paint space? And will you continue to remain positive on Asian Paints?
So from a Q2 perspective, definitely very high rains happened in first month. So paint demand, exterior paints, for example, is very difficult when such high rains happen. Currently, crude is also back to now a multi-month high. So I think from a Q2 perspective, slightly there is a underweight stance on the paint stocks. Within paints, clearly we like Asian Paints the most. We have seen Sherwin-Williams, we have seen JSW Paints, Jotun Paints. Many players have come. No one has reached even a 2% market share. So in a 70,000 crore, if no one has reached 2% market share, that means new player like Grasim also will find very tough. And they will not be able to dictate marketing, the dealer commission or the margins or the advertising in a very big way because they'll be too small in the medium from a 3-year, 5 years perspective. But definitely for Kansai also it will be negative. So we do see Q3 numbers for Asian Paints being very strong because full festival demand will be there and margins will remain strong. In Q2 also I expect 400 to 500 bips gross and EBITDA margin expansion for Asian Paints. So it's a slow volumes in Q2, but strong margins.
Okay, before we let you go, a couple of these big movers this year, right, in the FMCG space include names like Varun Beverages, that's up almost about 40%. United Spirits has had a very good run this year, up almost 20%. Something like a Colgate is up 30%. From here on, what would your top picks be that have both valuation and growth headroom?
Sure. So we like Colgate, Dabur and Godrej Consumer. As I said, overall rural is tough, but there is a leadership transformation clearly happening in Colgate. Even in GCPL, still some bit is left. And as I said, Dabur, Mr. Philip Hayden coming and a lot of transformation being driven by Mr. Mohit Malhotra also. I think these will be the clear overweights for us currently. Varun Beverages is something which we continue to like. There clearly, if they can get more geographies, for example, if South Africa business they can get from Pepsi, I think that will be positive. Having said that, whenever very high rainfall happens, the demand for the beverages goes down. So first month it was tough, definitely. But after that, it has been quite decent in terms of demand recovery. So those would be our topics.
Okay, all right. Thanks a lot, Abneesh, for joining in. Appreciate your thoughts. That's the word coming in on the FMCG space and all the stock ideas as well as what you should be doing in that segment.